Welcome to another episode of Pre-Market Analysis from Trading Couch, where we learn and earn together. The previous pre-market report was spot on. As discussed, and predicted, Nifty continued to be bullish and gave good money to those who took long trades on the levels shared in the pre-market report. Now let's have a glimpse of the previous episode of Pre-Market Analysis. Here you can see that the candle has given us a strong closing with average volume above previous 13 days closing. This shows us that the buyers are happy with the price currently being traded in the market. Parameters, we can say that the breakout is probably not a fake one. The CPR for 15 of February would be here. You can see that it has coincided with the major resistance zone, which has been now converted into major support zone. Shows momentum, then the price might break away from this weekly high and continue to move upwards. If there is no momentum seen in the starting trading hours, then the index might run within a range created in the first 1 hour. If there is a gap down opening, and price falls below the CPR or the major support zone, then the price might move up to this consolidation, and might take a halt, and then continue to move up. So do not take, it's not mandatory that you take a trade all the way. Now let's see how the market behaved and where the trade could have been executed. The market gapped down and started to move further down. This is usually common when the market has made a huge rally in the previous session. This down move is called as pullback, and this was confirmed by the size of the candles becoming smaller every 5 minutes, with decreasing volume. Then there was a doji candle formed near the zone of reversal followed by a bullish candle. Here two types of entry could have been taken. First one is the predatory entry, where you enter the trade right after the formation of doji with SL below the doji candle. And the second one is entering the trade after the formation of a strong bull candle confirmation. Market gave several opportunities for a trader throughout the session. The third trade could have been entered on the breakout of the day's high, with stop loss being below the breakout candle. The fourth entry could have been taken once the hammer candle was from red near the CPR and the major support zone. The fifth entry could have been taken when there was a formation of double bottom near the CPR. And also an entry after the break of the neckline of double bottom pattern. The sixth type of entry could have been taken when there was a trend line breakout of consolidation above the CPR and major support. And one more trade, when the previous day high was broken, entering after the close of the breakout candle above previous day high. All these trades gave the trader with more than 1:2 risk rewards. This is the beauty of the market. It generates multiple opportunities throughout the day. The concept of CPR has been a boon to a trader and provides with accurate entry points. To learn more about CPR, check out my video series on CPR. The link is given in the description box. Now let's move on to pre-market analysis of Nifty for 16 of February. First, let's see the market in the higher time frame, to have a broader outlook of the market. The price has broken out of the triangle pattern and given a strong bullish close above the upper boundary of the triangle. Now the market will soon face another resistance zone near this area of consolidation and sharp fall. Then further we should mark the swing highs and lows, and if any of them collude with other zones, then that zone will act as a strong resistance. Here if we see closely we can see confluence of this resistance zone with the swing low, hence this can act as a strong resistance and one has to be careful taking long trades in this area. One has to wait for proper price action. Moving on to 5-minute chart. Let's mark the importance zones. Based on the high, low, and close, the CPR for tomorrow will be in this area. And since it would be a wide CPR, it would act as a strong zone of support, and below that is, the presence of the area of long consolidation, makes it much more difficult for the price to move down, hence, the probability of price falling down, would be difficult unless, very bad news hits the trading session. Probably there would be a sideways market or might move up to the resistance zone above and continue to consolidate in that area. Let's look at the probable price action scenarios and how trade can be taken. Hope you are learning from my pre-market videos and are able to take good trades. Before you leave, please do subscribe to the channel, like and share the video.